Welcome to this explainer. Today, we're completely bypassing the usual hobbyist hype. So no unboxing excitement, no emotional attachments to our favorite teams. Instead, we're going to look at this space exactly for what it's become, a legitimate, high-level alternative asset class. We are looking at a really crucial window right before the 2026 FIFA World Cup, and I'm going to walk you through a comprehensive portfolio construction guide based on the latest market intelligence. Let's get started.
To really understand this market, we first need to define our core philosophy, which means drawing a very strict, objective line. On one side, you have emotional collecting. This is driven by childhood memories, team loyalty, and just short-term weekend hype. Honestly, it's pretty unpredictable. But on the flip side, we have rational yield generation. This is based on hard data, strict risk-reward profiles, and identifiable macro and micro catalysts. And it's exactly with this analytical lens that we're going to evaluate the current market shifts.
Okay, let's dive into this. Here is our board meeting style agenda for analyzing this shifting landscape. We'll start with the macro catalyst of the 2026 World Cup, then compare the risk-reward of Yamal versus Endrick, look at Ousmane Dembélé as a turnaround candidate, examine market infrastructure like PSA and Pokemon, analyze the industry disruption of the Fanatics era, and wrap up with a solid guide for institutional investors. Section 1. The asset class and the 2026 World Cup as our massive macro catalyst. If you just glance at the surface of the soccer card market right now, you might actually think it's quieted down. And yeah, the extreme uncalculated speculation from the pandemic era, that's largely flattened out. But under the surface, smart capital is quietly and aggressively flowing back in. Why? Because the markets are already starting to price in the 2026 World Cup. You see, normal club seasons often just generate short-term, localized buzz. But World Cups, they forge true global heroes practically overnight. Players go from being just well-known athletes to international superstars in a matter of weeks. The savviest investors are using these next 12 months as a critical window for asset allocation to anticipate exactly who those heroes will be, long before the mainstream market wakes up. Moving to Section 2, Risk, Reward, and Asset Allocation. Let's evaluate some specific players through a strict financial lens. Now, what's really interesting about this slide is the extreme contrast in market behavior we're seeing right now. On one hand, we've got Lamine Yamal. He has turned into the ultimate high-yield, high-volatility asset. His market is heavily driven by pure FOMO right now, the fear of missing out. Rare autographs and parallels of his are hitting dizzying record prices because buyers are literally panicking that they might miss the boat on a once-in-a-generation talent. He is a classic high-beta play. Then, on the other hand, you have Endrick. Despite his immense talent, his market is developing much more quietly. But strategically, that is his biggest strength. Endrick acts as a low-beta, high-stability asset. He has a very broad, controlled collector base backed by the historical strength of the Brazilian market. His value isn't built on a frantic hype wave. It's built on a wide, fundamentally sound floor. Just to underline Endrick's stability, check out this recent quote from his national teammate, Casemiro. Now, in sports media, sure, that's just a nice compliment. But looking through our financial lens, this is essentially insider-forward guidance. Endrick's path at Real Madrid is confirmed, he brings valuable European experience, and he's being firmly integrated into the long-term architecture of the Brazilian national team. Historically speaking, the combination of Real Madrid and Brazil is one of the safest narratives in the entire alternative asset space. It basically secures a massive fundamental floor for his market value over the next decade. Section 3, Evaluating Assets Based on Recent Catalysts. Let's look at a classic turnaround play. For years, Ousmane Dembélé was seen as a highly volatile, extremely risky asset. He was European soccer's eternal what-if player, undeniably gifted but plagued by injuries and inconsistency. But as we know, narratives drive this market. And Paris Saint-Germain's recent Champions League success has completely rewritten Dembélé's story. People are now seriously talking about him as a Ballon d'Or candidate. This creates a rare, fascinating investment opportunity. Because he was overlooked for so long, a lot of his older rookie cards and rare parallels are severely undervalued right now compared to his current metrics. With a strong French national team heading into upcoming global tournaments, he is the textbook example of a legacy asset experiencing a massive, catalyst-driven turnaround. Section 4, Market Infrastructure. We are pivoting to the macroeconomic factors here, specifically supply chain bottlenecks. Before we get into the bottlenecks, we need to completely redefine what grading actually is. Sticking a card in a plastic PSA slab is not some quirky hobbyist thing. It is an essential institutional mechanism.
Grading provides third-party authentication and condition verification, which are absolutely crucial requirements for value preservation and generating global liquidity. If you want to securely move high-end alternative assets across borders to institutional buyers, PSA grading is the standard infrastructure that makes those transactions reliable in the first place. Let's move to and see how this builds into a really fascinating supply chain effect. Right now, there is a massive global boom in modern Pokemon cards, and it's completely overloading PSA. This is a brilliant example of a cross-market economic impact. Because millions of Pokemon cards are clogging up the grading infrastructure, there's a significantly lower supply of freshly graded, high-end soccer cards hitting the market. This bottleneck creates a natural scarcity, which naturally drives up the premium on existing soccer cards that are already authenticated as PSA 10s. It just goes to show that modern alternative asset markets don't exist in a vacuum. A pop culture trading card game is literally dictating the supply chain economics of global sports assets.
Section 5. Industry Disruption. We are witnessing a tectonic shift in market power right now with the Fanatics era.
You should really look at this just like a major corporate M&A transaction that is completely altering an entire industry landscape. For generations, Panini basically held a monopoly on the World Cup market. Well, that era is officially over. Fanatics has taken over the FIFA licensing rights, marking a monumental shift in market power. But here's the thing. Fanatics isn't just printing cardboard. They are building a closed ecosystem. Their strategy links physical cards, digital collectibles, athlete partnerships, and exclusive live events into one continuous loop. For investors, this means the institutional outlook on where future value lies is shifting entirely. Panini's legacy assets will always hold historical weight for sure, but the future flow of capital is going straight through the Fanatics infrastructure.
Section 6. The Synthesis. Let's turn all this analysis into an actionable strategy. We've covered macro catalysts, individual risk profiles, supply chain bottlenecks, and massive corporate takeovers. So the ultimate question for anyone managing capital in the space is, how can risk-conscious investors safely diversify in this current market environment? And this brilliantly illustrates the solution with a sleek 3-bucket portfolio model designed for institutional capital. Bucket 1, high-yield rookies. This is your high-risk, high-reward allocation. We're targeting momentum players like Lamine Yamal, where FOMO drives exponential short-term gains. Bucket 2, blue-chip stability. This is your fundamental foundation. Here, you allocate to assets with a broad collector base and a secure institutional future. Think Endrick at Real Madrid or established greats like Kylian Mbappe. Finally, bucket 3, turnaround assets. This is where we leverage current market catalysts to capitalize on mispriced legacy assets, like Ousmane Dembélé, whose public narratives are drastically shifting. By balancing these 3 buckets, you insulate your portfolio against isolated shocks while absolutely maximizing your upside for the 2026 World Cup.
I'm going to leave you with this final provocative thought. The transition from pure pandemic-era speculation to calculated, macro-driven investing, it's basically complete. The infrastructure is shifting, supply chains are bottlenecked, and the next generation of global heroes is stepping onto the stage. The next 12 months will literally be the most critical, transformative window the modern soccer card market has ever experienced. The window for early strategic allocation before the 2026 World Cup is closing fast. The data is clear, the catalysts are set in stone. So the only question left is, how are you going to position your portfolio before the mainstream wakes up? Thanks so much for joining me to dive into this alternative asset class. I hope it gave you some great insights.